we'd be a lot worse off without energy and materials, which are leading this morning. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Yes, a flattish open. Energy's helping, but we've got a sort of defensive tones to the market. Consumer staples are leading early on. Healthcare is leading. Merck's having a good day. Merck's not been great in the last few months, but after that terrific announcement, co-producing the Johnson & Johnson vaccine, all the big pharma names are up. Bristol, Lilly up as well. So slightly defensive. Tech's flattish. Mega cap tech also flattish. Banks flattish. You notice China, that's MCHI. It's the main China ETF. That's down more than 1%. And that's because the main China bank regulator, Mr. Guo, came out with some rather aggressive comments, including comments about the U.S. stock market overnight. Here's what he said. He said financial markets are trading at high levels in Europe, the U.S., and other developed countries, which runs counter to the real economy. We are very worried about the financial markets, particularly the risk of the bubble bursting of foreign financial assets. He's calling out specifically the U.S. stock market there, and he's using a rather dirty, controversial word, bubbles. That's a tough word to use. There's a big difference between a rich valuation. The U.S. stock market, as we said, has been richly valued for a while, trading at 22 times forward earnings. But there's a big difference between that and a bubble. A bubble is a very specific thing where you're divorced from any kind of economic reality. I don't think we're there yet. If you look at where the markets are globally, actually, it's China this year that's had the biggest move up. China's been a leader in the global markets. Russell 2000's up 15%, and China's not far, up 11%. People say, well, that's a bubble. I don't know. I mean, these two sectors, small cap U.S. stocks, China, they've underperformed for years and years and years. And they're finally catching up a little bit. I don't think rich valuation is necessarily a bubble. So, again, that's a controversial word to use. Taiwan also great. Look at Europe. We're up 4%. The S&P's up 3%. And remember, that multiple, the 22 times S&P 500 multiple, has been coming down recently as earnings have been aggressively coming up on 2021. So bubble, divorce from reality, I don't know. Again, I think the important thing is that this sort of is part of the growing discussion over how and when central banks around the world should start paring back stimulus. That's the real story about what's going on here, not so much about whether we're in a bubble or what Mr. Guo thinks about it, but what central banks are going to be doing. Elsewhere, we've got something I haven't seen in a while. We actually have an IPO of a fairly well-known company, a real IPO, folks, and I don't mean a SPAC here. Oscar Health is scheduled to price tonight on the Nasdaq. This is a pretty well-known, it's a digital health insurer. It's been around for a while, but it's got a nice following. Price talk, 31 million shares at $32 to $34. We'll keep an eye on that. But the important thing, of course, as David has been covering every single day so well, the SPAC business is just overwhelming the IPO business. Here's the numbers year to date. We've had 260 SPACs plus IPOs. They've raised about $80 billion, as you see. But if you break it down, it's pretty amazing. 203 of those 260 SPACs that you see there are overall coming from the markets for SPACs. I mean, essentially, SPACs are 75% of the dollar volume of all of the new issuance raised and 80% of SPACs versus IPO. So the numbers are really overwhelming so far, and it doesn't show any signs of abating. And David, you've been doing a great job covering all that. One old IPO hand I called this morning to ask about these numbers said, why shouldn't it do well? SPACs are riskless call options. You can get out of the deal anytime you want, and you get to give forward guidance. And remember, guys, Carl, giving forward guidance, that's pretty amazing. You try doing that with an IPO, you'll get arrested. Or if not arrested, the SEC is going to call you about whether or not they want you to go public. There's all sorts of advantages that SPACs have right now, and you can see they are taking advantage of it.
Shepard Smith here. Thanks for watching CNBC on YouTube.